The majority of 401k and state-sponsored IRA plans offer target date funds or index funds that shift from risky to more conservative investments as you get closer to your retirement date. But you don't have to rely on someone else's plan to make that happen. Yahoo Finance's Carrie Hannon set up her own target date retirement fund, and you can too. Carrie, walk us through some of the steps that you took.
Hey, Brad, thanks a bunch. Yeah, I'm not exactly a do-it-yourselfer, but when it comes to my retirement investments, I like to have a little more hands-on than just set and forget, right? So I decided I was going to create a custom target date fund for myself. And so what I did is I picked the date that I thought would be the year, ostensibly you would retire. So maybe it's 2035, 2045, whatever it is. And then I looked at the various mutual fund companies and other financial services. T. Rowe Price does this, Vanguard, Fidelity, on down the line. And I looked at what their target date fund in the year that I selected as when would be my retirement date. I looked what their funds had and what the holdings. Number two was, so I picked the date and I did my research of who had a date fund in that year. The second thing is I checked the holdings. What does that target date fund hold? Which index funds? And generally they are index funds. Do they have an international fund, a total stock market, a bond fund, international bond fund? Number three is look for low expenses. I looked through the different fund companies. Fees are across the board. These are typically fairly low fee investment. So you want to go there. The fourth thing I did was, okay, I picked who I was going to go with. And in my case, it was Vanguard. I already had an account there, so it was pretty easy. I opened up my IRA there, my individual retirement account there, and I added the funds. I looked at exactly what their fund had in that target date. I added those precise funds into my own account, but I tweaked it a little bit because whereas they had a certain percentage in equities and a certain percentage in bonds, I wanted a little more equity exposure. I was a little bit more of a risk taker than they had aligned for me. So I tweaked it just a bit, but I used that as my guidepost, right? So, I'm not going to go flying down into the gutter with my bowling ball here. I use that as my guardrails. And the last thing that I do is every so often, and certainly once a year, I go back and I rebalance it. I tweak it to get it exactly to make sure the asset allocation is right for my risk tolerance and my time before I think I'm going to need those funds. And so it's very important to sort of look at it, rebalance it, because now you're in control. There's not a fund manager who's going to be a target fund manager who's going to be doing that for you. And the truth is, Brad, I actually ended up with a lower cost fee because the target date fund as a whole was more expensive than the individual index funds that I put into my account. But I'm not paying for someone to manage it, right? I'm taking that responsibility. But I got to tell you, it's loads of fun and it keeps me paying attention to my investments. Maybe not everyone wants to do that, but it makes me feel in control.
Carrie, thanks so much for breaking this down for us. Appreciate it.
Thanks, Brad.